Hey everybody, it's Brent Capel, your Athens, Ohio realtor. Hey, today we're going to talk about understanding home contingencies and what every buyer and seller should know. All right. So, listen, in residential real estate transactions, contingencies are contractual conditions that must be satisfied for a purchase agreement to move forward. They serve as risk management tools, protecting buyers from unforeseen issues and providing sellers with structured timelines and performance benchmarks. Properly drafted contingencies reduce legal exposure, clarify expectations, and create a defined path from contract to closing. So, here are five of the most common contingencies, and this is why they matter. Number one, the ever popular inspection contingency. The inspection contingency allows the buyer to conduct professional inspections, general home inspection, pest, radon, septic, well, etc., within a specified time frame. If material defects are discovered, the buyer may request repairs, negotiate a price reduction, request a credit, or terminate the contract, depending on the contract language. This contingency protects buyers from undisclosed uh, structural, sorry about that, mechanical, or environmental issues and create an opportunity for sellers to address concerns before closing. Number two, just as important, financing the mortgage contingency. So the financing contingency makes the contract dependent upon the buyer securing loan approval under specified terms. It typically outlines loan type, conventional, FHA, VA, USDA, non-traditional, etc. Interest rate parameters. What else we have going on here? Loan amounts, approval deadlines. So if the buyer cannot obtain the financing despite good faith effort, this contingency allows termination without forfeiting earnest money for sellers. It ensures the buyer is actively pursuing financing within defined timelines. See, we have one that protects the buyer, that one protects the seller. Number three, appraisal contingency. This is a big one. Just had an appraisal, came back today. So, number three, appraisal contingency. Most lender-backed transactions require an appraisal to confirm the property's market value supports the purchase price. Nobody wants to pay more for a house than what it's worth. If the property appraises below contract price, the buyer and seller may renegotiate. I've done that before. The buyer may bring additional cash. I've done that before, or the contract can be terminated, and I've had to do that before. This contingency protects buyers from overpaying and protects lenders from over collateralization, right? Nobody wants that because then it just makes homes harder to buy for everybody. Number four, home sale contingency. Been there and done that one as well. So a home sale contingency allows a buyer to make an offer that is contingent upon selling their existing property. This clause may include a deadline for the buyer's property to go under contract, a right for the seller to continue marketing the property, a kickout clause if another offer is received. While beneficial for buyers managing equity, sellers often evaluate these offers carefully, right, due to increased transaction risk. They don't want to lose a sale from somebody else that might be a cash deal or lending that there's no home sale contingency. Number five, title and insurance contingencies. The title contingency ensures the property has clear marketable title, free of undisclosed liens, encroachments, or ownership disputes. Additionally, insurance contingencies protect buyers if they cannot secure homeowners insurance at reasonable terms. These provisions safeguard the legal and financial integrity of the transaction before closing. So let's button this thing up, all right? Why do contingencies matter? Contingencies are not obstacles. They are structured safeguards. They balance risk, define expectations, and provide lawful exit, right? Everybody wants that escape hatch when conditions are not met. So whether buying or selling, understanding how contingencies function allows you to negotiate from a position of strength and minimize surprises between contract and closing, right? It protects the seller and the buyer. Listen, if you're preparing to enter the market, reviewing contingency language before signing an offer can prevent costly misunderstandings and protect your investment. You have to protect yourself. Find a real estate agent that knows what they're doing. Hey, everybody, this is Brian Capel, your Athens, Ohio realtor. Listen, be sure to like and subscribe to these videos. Why do you ask? Because I would do it if somebody asked me to. So hope you have a blessed day. Thanks so much. We'll see you next time. Thanks.